Hi, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage, and today what I want to talk about is the VA IRRRL. That stands for the Interest Rate Reduction Refinance Loan. It is the simplest, easiest loan out there to do a streamlined refinance for a veteran on a VA loan. Okay, so couple things. I have a lender that is giving what they call a Govy 125. They are juicing the price for a very short period of time by 125 basis points. There is nobody out there touching these mortgage rates. Super simple for the veterans, especially if you closed in the October-November time frame of last year. You should seriously consider refinancing. There are certain criteria on an IRRRL that need to be met. They're very simple. 210 days from the date of your first payment. You've had to make at least 6 payments. The interest rate that you're getting on the new loan has to drop at least 0.5%. You're allowed to roll in your cost, but you have to recoup all your cost within 36 months. Now, there are streamlined IRRRLs at no cost. Veterans, do not get confused with people out there that will say no out of pocket, no fees at closing. You can skip 2 months mortgage payments. If you want to do that, the program allows for it. But if you quasi-skip 2 payments, you're rolling that into your mortgage and into your principal balance. The best way, if you can afford to do a streamlined refinance at no cost, you want to try to get a credit that actually covers your closing costs. If you're super fortunate to also get a credit that covers the VA funding fee if you have one, that's even better. If you're exempt, of course you don't have that VA funding fee, you only have to cover the cost. They do allow you to roll in your prepaids for your taxes and your insurance if you'd like. You're going to get your old account back from your current lender typically within 30 days. If you want to roll that in and then take the money when you get it and apply it as a principal payment, you can do that. If you roll it in and you spend that money, you essentially took cash out, just like rolling in any payments. Okay, so let's try to get into some of those numbers. What does that really mean in dollars and interest rates, right? So if you're looking at these interest rates today, and today is 7/24, and I have to say, look, rates are subject to change. I'm licensed in Virginia, Maryland, DC to do VA IRRRLs, and that's what we're talking about here, okay? An IRRRL stands for Interest Rate Reduction Loan. You have to have a VA loan. All the veterans out there, I'm a veteran-owned business. About 30 to 40% of my business is doing VA loans. It really is one of my favorite loans to originate, okay? So let's look at these numbers in conjunction with where rates have been, right? We were getting close to 8% in some situations. The 0-point loan for someone with a 720 credit score, veteran VA loan, 5.637 is a 0-point loan, no credit to you, the borrower, okay? We're trying to do this IRRRL and save you money, and in my opinion, the best way to do them is also to do them at no cost, okay? If they give you 0 credit, that means you have to pay all of the closing cost, okay? If you take a slightly higher rate at 5 3/4, they pay you 0.503, or they're giving you $3,000 toward your closing cost, okay? I like that deal. I also I don't like the 5.875 that is paying less than the 5 3/4 for a worse rate, so you would never take that deal. At 6%, they're paying you 0.69% of your loan amount as a credit. That is on a $600,000 loan, $5,240 toward your closing cost. I might like that best. Let's look at the numbers and evaluate it. Okay. If we look at the numbers on a Streamline refinance on a $600,000 deal, average closing costs are $4,902. We'll break those down real fast. Underwriting fee, admin, settlement company fees, recordation at the county level. Okay, so it's roughly about $4,900. Remember, we talked about those interest rates in conjunction with the loan costs. Let's look at those. All right, we had 5.6375 at 0. You would have roughly $4,902 in cost. If you took the 5 3/4 and got the credit for $503, you'd have $1,800 in cost. If you took the 6% with the 0.869, you would have a credit. You would have all your costs paid for, and you would actually make $312. So that would be a no-cost refinance if you were exempt from the VA funding fee. Okay, if you were not exempt from the VA funding fee, the VA funding fee is a 0.5 point, and we'll get into that here in a minute. So, what does it take to be eligible for an Earl? Okay, let's just take a step back here real fast. So, to be eligible for an Earl, you have to have had the loan on the books originated for at 210 days after your first payment. So if your first payment was July 1st, then 210 days later, you're eligible to do an Earl. Yeah, had to have made at least 6 payments in the meantime. You also have to lower the interest rate by at least 0.5%, and you have to recoup all the closing costs within 36 months. The VA has these criteria in there to protect you. In years past, let's say interest rates drop by 1%, but in the old days, some people would only give you a 0.5% lower rate, and then they'd refi you, and then a month later they would say, hey, I can refi you again. And so the VA put that 210 days stipulation in there and at least a 0.5% to try to get people down to market and keep people from constantly refinancing you like they did in the past. They called it equity stripping, okay? So, couple things. Remember to avoid lenders that will sit there and say, oh, you can skip 2 payments and we can roll all the cost in and you won't have any outlay at closing. You have to be careful of them rolling in 2 months payments, the closing cost, and if you have a VA funding fee, the VA funding fee. That could be a substantial amount of money, okay? So you want to make sure you ask how much credit is going toward my closing cost, how much credit is going toward my VA funding fee, how much of those are you actually rolling in versus what my credits are, okay? Keep in mind the way I like to do these VA IRRRLs. I like the scenario where you're getting the 6% loan. I tell the client, you'll bring your escrows to the closing table, or I can roll those in, but within 30 days, your current lender will send you back your escrow, and you can send it in as a principal payment, or you can replenish your savings account either way. But if my credit covers all the cost, it's a no-cost refinance, okay? If you're in a situation where you have a funding fee, okay, numbers look a little bit like this. Here, you would have $7,900 at that 5.37 interest rate. The 5 3/4 is $4,800, and then at the 6%, you would roll in 2688. I personally am okay with rolling in a half-point VA funding fee on most of these deals. Okay, you won't feel that impact typically. Okay, you're not going backwards $8,000. Okay, in the situation, I would be okay with all of those. Now, remember the rule on the VA IRRRL. You have to be able to recoup closing costs within 36 months. So how do we calculate that, right? We have to go back to the calculator and figure out what the savings are. Remember, my favorite loan is the 6% loan, okay? That was at no cost if you were exempt. In that scenario, if you were at 6 3/4 and you got 6% as the interest rate, you would save $312 per month and pay off $77 the very first month if you were comparing the very first month of both loans. You save in two ways on interest rate. You save on the payment, and that's what a lot of people are looking at, right? But they should also realize that $77 extra on this particular loan is paying off an extra $1,000 per year on your principal balance. You can't sneeze at that, right? That's huge. You're saving $3,600 in payment, but you also save $1,000 in principal. That's a lot of money, essentially, okay? Now, remember that 5.637? I just want to run those numbers for you real fast. Remember, the no cost at 6, there's nothing to recoup, right? And if you did have the funding fee at 6, we can do that real fast. Remember, it was $312 savings. If you're rolling in $2,600 divided by 390, you're recouping in less than like 7 months. So you recoup all your funding fee before, and you start making money before you're even eligible to refinance again, because of the 637. Now the recoup is $570. Okay, so if we were looking at the high end on the 7990 divided by 570, 14 months. Okay, so you essentially have a situation here where you could pick whichever one of these you want. So in closing, right now with the VA Govy 125, this absolutely is a win-win, especially if you're above 6 3/4 on your interest rate. Okay, it's super simple. Takes about 3 weeks. Need an ID, mortgage statement, the note, and your insurance, and you're done probably within 3 weeks.